Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news, the US Federal Reserve has decided to keep printing money and to keep interest rates at an exceptionally low 0% for an extended period. The US Federal Reserve's Open Markets Committee came out with its decisions this morning, and it has cut its forecasts for US growth down into the low 3% range from in the high 3% range. The US Federal Reserve is concerned about the moderate pace of economic recovery and doesn't seem too worried about inflation. It says a spike in inflation is temporary. So the Federal Reserve is going to keep stimulating the US economy. The US Federal Reserve Chairman Bernanke, in an unprecedented press conference, said that an extended period for exceptionally low interest rates meant a couple of meetings of the FOMC. That suggests this US Federal Reserve may start increasing rates from September. The US Federal Reserve is also going to keep reinvesting proceeds from maturing bonds in US Treasury bonds, effectively recycling printed money. However, it will let its current program of money printing end at the end of June. Now, the Dow celebrated this further US Federal Reserve support for the stock market. Gold rose to $1,530 an ounce as people worried about inflation and continued money printing. The US dollar fell. Remember, more money printing means devaluing of the US dollar, and it fell against both the New Zealand and the Australian dollars. New Zealand dollar up towards that 81 US cent mark, not far off its post-float high of over 82 cents. The Australian dollar, can you believe it, up to $1.09 US. And it's also reasonably strong against the New Zealand dollar as well. Elsewhere, Japan's sovereign credit rating may be cut, according to Standard & Poor's. It's estimating the rebuild after the quake and tsunami could cost $500 billion US. Also, Australian inflation figures were slightly stronger than expected yesterday, up 1.6% in the first quarter. That was above 1.2% forecasts and suggests the Reserve Bank of Australia may increase interest rates towards the end of this year. I'm Bernard Hickey. That was 90 at 9, brought to you in association with the Bank of New Zealand.